So the question is, why we're here, or why am I here? Yeah, so because this is a data summit, this is a manufacturing summit. So I think these two are very important for Germany and also for China. So why? If you think about the manufacturing, I think this morning it's mentioned, Dirk, you mentioned like the over 27% of the GDP of Germany is manufacturing based, and in China in 2002 years ago, 2023, is 27, 28% of the Chinese GDP is manufacturing based. And if you look at the number of people working in manufacturing, is 104 million people in China working in the manufacturing space. So similar to Germany, manufacturing is one of the core driving engine for China. But of course, we're on a different path. I think if you look about like 20 years ago, China was more on the lower end of the manufacturing, so started from the making shoes and the clothing, but now you see a lot of innovation, driving from that direction. So that's important why we are here to, share our perspective. And also, I think during the 20 or 30 years history, a lot of Chinese suppliers, Chinese manufacturing company are actually well integrated into the German or European data manufacturing supply chain. It's important, for us to work together, for the Chinese company and German and European company work together to tackle the current challenges. That's one reason why I'm here. The second reason is data. So when talking about data, when we're talking about DNB has a universe of 600 million business record that we can trust and rely on. So from China, we are contributing more than 110 million. So that's a one of six of the DNB's global data cloud is contributed from China, but of course with very increasingly complex regulatory requirements on data compliance, privacy, and also data localization requirements. So that's all posing challenges when we are talking about digitized manufacturing with the data support. There's a lot of nuances, we can talk about. So I'm really glad. And also DNB as a global organization. So we've been in China for over 40 years. Yeah, so we apply the same global standard when it's come to normalize data, making sure data in high, good quality, making sure our clients also always enjoy the best possible data. And also that's our commitment, not only from Germany, from Europe, or also from our China organization. So really glad to come here. So today, there's a lot of details in the slides. I know it's the last session of the day, and it's in the afternoon. So probably forgive me to not go into the so many words and the wordings into the slides, but I think it is a message, that matters most. So I'll share, basically, three parts. One is our observation of the China-EU trade. So what happened after COVID? What's happening in terms of the integration or the supply chain from China to Europe and vice versa. Secondly, of course, everybody's talking about the disruption caused by tariff and the challenges. So what are the high level perspective from China perspective? And thirdly, and about we're talking about some of the examples and the best practice in terms of what we can see, how data are leveraged, by clients and also supported by DNB in terms of manage those challenges. Yeah. So so if you look at sorry for the chart, but if you look at the China EU trade, so in terms of the export, actually China export much more than we import. So you can see the as a proportion of the China export, if we look at one of the processing trade or one of the labor intensive product and also the tech intensive product, we can see during the past 5 years, after COVID, we can see the percentage of the tech intensive export has been really picking up the momentum. So the labor intensive or the processing trade, as we defined, as a part of the China export has decreased by 7%. Yeah, so you can see in a way China has been moving up a little bit along the value chain in terms of exporting more of the technology-driven products. You can see we also have another statistic, from our data in terms of technology-intensive products has gained, around 4%, in the total mix in the China's total export. So that means the more of the mobile phones and more of the high tech manufacturing compared to in the footwear or the luggages or your the daily supply. So you can see the structure of the China's export has been changing as a result of the 5 years transformation. One of the backdrop is the Made in China 2025 initiative by the Chinese government. Because in China, we have a strong industry policy that's driving a lot of investment in certain areas. Probably you guys can see a lot of Chinese export in the EV or in the solar panel or in the batteries. So that's where all the investment are going, and we see as a consequence, the Chinese export has been focusing on more of the high tech supply other than the traditional processing trade. We can see as a world economy really has been suffering post COVID. There are different disruptions, and we do see a decline, but then it's bounced back. Now we are the economies grow at around 2.8%. So last year China achieved around 5%, but the 5% is really driven by export. Yeah, so because export really help China to drive the GDP growth. We do have a structural issues domestically in terms of consumption and everything. So the export sector is still really critical, to maintain the growth, from the China perspective. But then if you look at China export to Germany, just a large number there. Compared to 5 years ago, the China's export to Germany has increased by 34%. So if you think the number is great, but if you look at the China export to EU is 41% growth. And also China to global, the overall export growth is 43%. So what does it mean? It means China is exporting less to Germany as a percentage. So where are these exports going to? So we also have another statistics where we did not show here. China export to Latin America and Southeast Asia has been growing at more than 50%. Latin last year will be growing at 80%. So does it mean that China is shifting away from the European supply chain? Maybe not. Maybe our players just they change the location for production, then it's re-export back to the European Union or US. But that's the very interesting trend we're seeing, that the bilateral trade between China and Germany is actually not as growing as fast as China's overall export growth. But if you look at the items, we see over 50% is coming from machinery, electronic equipment, and the parts. So China is still a very important part in the overall German manufacturing supply chain. If you look at the other round, yeah, so it's a German export to China. So it's not so exciting. We see a decline in 9%, compared to 2019 in terms of German export to China. I think the main problem is maybe in the motor vehicles, the automobile sector. Although you can see China is still a major trading partner of Germany, but the German export to China is shrinking slowly. From this chart, you can see the other trend is I mentioned the China export, especially in the vehicles. Yeah, because automobile is such a big industry in China, but we can see the emerging of the new energy vehicles in China. The export actually expanded by 32 times from around after from 2019. So actually, I live in Shanghai. 10 years ago, if you look at the cars on the Shanghai street, probably 60% is Volkswagen. Yeah. So today now we are see a wider range of different brands. But Volkswagen is still very competitive. They're a great company, but it's just saying, we can see there is a lot of also China not as a supplier to Europe, but also the competition to Europe. You can see the in terms of the electronic machinery export. Yeah, so we pick up. So this is German to China after COVID, but then it's going to shrink a little bit, back to the pre-COVID level. If you look at the vehicles, that's the part of this story. So number of vehicles, Germany export to China is really face, I think, a lot of challenges and competitions. Yeah, but it doesn't mean that we are no longer friends or we're no longer partners. But I think it's more dynamic. It's less of one way, but two ways. Yeah, today we're also joined by two clients coming here, and they come to serve their European clients out of Germany, but also also think about the build their supply chains in Europe. So I think it's more of a two-way and not just a one way. From DNB perspective, we've been supporting information flow. Yeah, so Chinese inquiries onto the German record or German entities and German inquiry into Chinese record. You can see, we always has high volume of a German inquiry interest in the Chinese entities, but we almost have a zero from China. So this is the China inquiry into Germany. We almost have zero, but now it's grown by 9 times. Yeah, so I see also another message here is lots of inquiry being done electronically. That means our clients are actually finishing or on the path of digitalization. They've inquiry on the API, from digitally. So a lot of clients are you see the trade actually are not growing as fast as the digital inquiry. So more clients are using digital format to inquire the counterparty. Yeah, so that's another observation we see from the DNB China's perspective. Yeah, so overall, the China-German trade is still critical for us, but then we have to catch up. Yeah, I think we have to work to do, yeah, to to make sure our clients will seize opportunities in a very challenging environment. But then when it's come to a tariff, probably I won't go to the details because I think there will be different angles. But then China is in the center of the U.S. China dynamics on the tariff. So we think it will cause disruption to the global trade, and then lots of clients see the strain on the supply chain. Actually, I was in Shanghai 3 weeks ago. Lots of ports already stopped shipment to the U.S. until a week ago. There's a new deal announced, and then people were trying to get back the shipment. But now it's very difficult to find the ship, yeah, because there's a significant volume accumulated. So it's a lot of disruption. It doesn't mean that there's a deal, then the disruption will go away. The disruption is always there. In terms of goods, in terms of shipment, and also the decisions company have to make. Then it's imperative, and there's a lot of discussion on resilience. So that means it's imperative to build resilience in such an environment. Yeah. So I think that's the common ground where we can see. So what are the opportunities emerging, from the disruption. Yeah, overall, from China perspective, we think there are three things we should do. One is to diversify the market. So when we say diversify the market, it also could means different the market for different supplier base or the market for different customers or both. Yeah, so we see a lot of effort of our clients by looking for potential alternative data, alternative supplier base or customer base by leveraging data. So one piece. The second is transform the supply chain. So there's a discussion on build China plus one, find a backup supplier, or find different suppliers, and also the tier N discussion we're talking about. Yeah, so that's another area we see a lot of energy and focus on that. The third piece is the visibility. Yeah, digitize the supply chain so we can see we have full transparency and visibility. So what are the some of the best practice we see from China, or what we normally advise our clients to do, or we see our clients as begin to do, from the China perspective. It's really you really have to start from the macro, start from understanding the market first. So we see a lot of emphasis on monitoring geopolitical risk or monitoring country risk, because previously people were not so interested in that because that is not as volatile as now. So now the geopolitical risk become a daily topic, especially from the Chinese clients' perspective. Yeah, it impact the supply chain, and also there is also a regulatory element of it. So it also impacts whether you can do business in certain country or not. So our clients are systematically monitoring country risk. So this is actually one example where we can have credit from Dun and Bradstreet by putting up together a country risk, for our clients, and also catered for their credit country risk appetite. So this I would say always start alert for the geopolitical risk, and also the discussions, the deal or no deal between China and the US, that will make an impact on the next decision. Yeah. The second piece is more of the data-driven risk management. But as I mentioned, from China perspective, in the ideal world, so we can aggregate the data in one place, in one data pool. Yeah, so then we have a crystal ball to understand what's going on. But then in reality, as Europe have a GDPR and a lot of data regulations, we see also a very dynamic and ever-changing data regulatory environment in China. So that means in many circumstances, as a practitioner in data analytics, we may not be able to aggregate the data in one place. So in each country, they have their own, data laws and regulations. We have to find sometimes in-country solutions for data analytics. This is just one example we did for a pharmaceutical company in China, trying to help them to leverage, for example, the regional economic and the payment data, the industry-specific data, and also we invented something called a financial benchmark, because in China, not all the private companies' financials can be leveraged, but then we develop an algorithm, and then by regulation, it can be disclosed domestically. So they've been leveraging financial benchmark to compare, the financial stability and the performance, of their counterparty. And also some of the non-credit data, because we often talk about the statement, a balance sheet, P&L, but then in this case, we've managed to get the non-traditional data. For example, their utility bills, what's the power consumption of a factory, or the tax the paid to the local authority. We managed to get those data on consent basis to help them to evaluate their counterparty. So But that data is not available outside of China because it's on consent to be leveraged domestically. But then in a very dynamic environment, we are trying to leverage data to evaluate the risk about the counterparty. We have to look at what we have in the global supply chain, but also be open-minded, or say, to the in-country specific solutions that can address specific priorities or pain points locally. Another example is, we've been using the DNB payment data to help our clients to manage their suppliers. You can imagine the suppliers are under financial stress, so they are late in their payment and they have bad payment scores. But so what's the action we have to take? Do we press them more, or do we give them more favorable terms? We pay them quicker so they are not forced under the stress scenario, which will cause a disruption of supply chain. So nowadays we do have a lot of conversations, with our customers and say, this is happening on, their payments, and then what's your strategy? How important this is for you? So it's pretty much an interactive approach. So we sit down with our client and define their objective, and then leverage this data. So what are the strategies they can take? Yeah. So um, another, I would say, after risk management, risk monitoring, another topic is how we can diversify from client base, from supplier base. Yeah. So what we've been trying, we've seen is like, again, this is a pharmaceutical example, is how we can, segment upstream, midstream, and downstream of a manufacturing supply chain, and accordingly understand, from the product perspective, and then map that product to the companies that manufacturing those products. Yeah. So this is a capability we've been working. I know in Europe we're also doing that. In China, we're also working locally to make sure we can distinguish under each product what are the availability of that product. So then in terms of disruption, we can easily identify the potential target alternative for customers. We're also building a tier N solution, also similar access we've been doing in China, leveraging this. Yeah, so it's all across the board that we want to make sure we can think ahead before the disruption to present the solutions for our clients. And also we also hear about the going overseas by the Chinese company. So as I pointed out earlier, we see there's a slowdown in the China to Germany export, but it doesn't mean that the supply chain is loosened. It can mean that the Chinese company set up the manufacturing base in other places that will export in Germany. So these are the examples of clients. They are Chinese exporter, but they've managed to set up a base in Romania, in Morocco, in other countries, fully localize the supply chain, but that's still supply to Europe and to the US. We see that's a trend, also sponsored by lots of local government in China. Actually, we've been partnering with a number of local government. They call this Go Global. So what Go Global means is that not only the Chinese manufacturing goods will go global, but also they support the Chinese suppliers to set up a local supply chain in a foreign country. Yeah, so from there they will export to their main market. So we see this is another trend. So as European buyers, you can see you will maybe encounter more and more Chinese companies actually from a third country, not from China. Yeah, so they also we also have a partnership with a number of local government. So to be honest, this has actually become more of a national strategy. Every province I go, each local government, they have a Go Global platform to help the Chinese business to move their supply chain outside of China to build a local to local business model to the clients. And also I would say a enhanced self-disclosure. Yeah, so maybe sometimes we can find data on clients from different sources, but only the clients knows them best. Yeah, so what we see another trend is the suppliers come to us say, yeah, so we want to self-disclose our data, yeah, to improve the transparency so that I can get an advantage in front my clients. So what you can do for us? Yeah, so far we've been helping more than 20,000, Chinese suppliers in the auto industry or auto parts industry to self-disclose their information other than the normal information disclose their qualification, their product, and more of their operational information. Also on the ESG front, disclosing their how they are compliant, for example, the European regulations. Yeah, so on that front, the DNB actually we have a program, in different provinces in China supporting the Chinese suppliers disclose that into the DNB data cloud, and also sometimes tailor-made to the requirement of their trade counterparties. But one important pitfall is that we need to make sure the standard is correct. Yeah. So how? Because another question people ask me is how you can make sure when the supplier is disclosing information, it's not a false statement. Yeah. So how you can verify that? Yeah. So that's we are building a team. Make sure sometimes we even go to the factory itself, even with site visit, to understand what's going on. And also it can be referred by other alternative data, such as utilities, as I mentioned. If they say the factory is running, then you can check the utility bill. Yeah, if they use power, then they're running, but there is no consumption of electricity. The factory is off. Yeah, so apparently, so from DNB, we have a natural advantage by verifying this self-disclosure because we have a wide range of data to cross-reference to. So as the lots of uncertainty arise, I see more and more urge from the suppliers. They want to self-disclose. They want to contribute more data, and also use the data to enrich the data supply chain or data cloud. DNB has. So both side or both end of the data supply chain can leverage from. Yeah. So those are few observations or I want to share. It's not a very high level, but it is pragmatic. Yeah. So but again, yeah. So I think this is a great opportunity, Dirk. Thank you, and to have this opportunity to exchange ideas. But I don't know if there's any questions.
Let's see. Thank you very much. Very interesting and excellent.